As India enters the 10th year of the Goods and Services Tax or GST, the focus is shifting from implementation to making the system more efficient. The government is using artificial intelligence, better data sharing, stronger enforcement and simplified procedures to reduce compliance costs and speed up tax refunds. Introduced on July 1, 2017, GST replaced a complex system of 17 central and state taxes and 13 cesses with a single indirect tax regime. The reform, implemented after years of negotiations between the centre and states, was aimed at creating a single national market and eliminating the cascading effect of taxes.
GST is a great breakthrough for the Indian economy. As earlier, before the GST, economy was impacted by the multiple taxes, and those were very complicated also. Now, with the implementation of GST, the structure is becoming more and more simplified, and GST has actually become a good and simple tax. So, this has created a unified market in the country and promoted the ease of doing business, which was much needed because taxes are a major complicated subject for the ease of doing business. So, with the simplification of taxes, this has increased the trajectory of ease of doing business significantly. And unified market. Now, you go anywhere in India, the GST rates are same.
Over the past 9 years, GST has widened the tax base, improved compliance, and strengthened revenue collections, cementing its place as one of India's biggest economic reforms. The number of registered taxpayers has grown from 66.5 lakh at its launch to nearly 1.6 crore in 2026, reflecting the increasing formalization of the economy. GST was introduced with four tax slabs: 5, 12, 18 and 28%, along with a cess on luxury, sin and demerit goods. In September 2025, the tax structure was streamlined into two main slabs of 5 and 18%, while a 40% rate was retained for select luxury and sin goods.
9 years, when we were at 10th year, it has been a successful experiment. It was one of the most challenging transformation, and I will say most important economic and the tax system. And top of it, the September 25, when GST2 was introduced, so some of the challenges which have come up, that multiple taxations, one nation, one tax, that issues were there, that was also, I believe, addressed. Now there are only two rates, basically 5% and 18%, and one is a demerit rate, which is a separate rate that doesn't matter at all. So now that way the system has simplified. IT system has made the life easier, so that's why it has helped the economy. Government has benefited by collection, both central and the state government, and businesses also fared very well on that point.
Average monthly GST collections have more than doubled since GST was introduced, rising from 89,700 crore rupees in 2017-18 to 1.85 lakh crore rupees in 2025-26. While GST has moved closer to its goal of one nation, one tax through simpler procedures and faster refunds, bringing petroleum products under the unified tax regime remains a key challenge.
I believe petroleum products should come under the ambit of GST because the markets are very volatile and crude prices goes up and down. So a stable regime of the taxes like the GST will provide a great support to the consumers in terms of welfare because now the with the such kind of taxes the prices are escalated at the higher level. So the implementation of GST in such products, particularly the petroleum products, I believe will give a great boost to the stabilization in the petroleum or the fuel inflation and support the economy.
Although the centre and states agreed in principle to bring petroleum products under GST when it was introduced, the final decision was left to the GST Council, which comprises representatives of the centre and all states and union territories. While the Council has discussed bringing aviation turbine fuel or ATF under GST, the proposal has not found support from the states. The centre has said it will take the proposal forward once states build a consensus on the move.